All right, hello everyone, and welcome to this ETF Sector Spotlight. As usual, Christian Tharp, Chartered Market Technician and Chief Technical Analyst at WealthPop, starting as always with our very simple sector breakdown here on bar chart, and not too much different than the look that we had to end last week. Last week saw technology at the top, discretionary and services right behind them. Discretionary this time on to start the week on Monday, Tuesday took the lead, and services relatively flat. But obviously, what you're going to see here today, looking at this, is that Tuesday wasn't the most bullish day. Now that's probably not all that surprising because tech wasn't up as big, or the Nasdaq wasn't up as big as some of the days we've seen. But you know, we saw a pretty big day on Friday and even on Thursday, and we're seeing most sectors in the red again. Of course, the Russell was down, the NYSE was down, the Dow was down. I think the S&P might have been flat to down. So not a great way to start the week. Had been a pretty good run up coming into this week. So certainly some healthy profit taking is not out of the realm of possibility. But all in all, we continue to question how much gas is truly in the tank of this recent run up here. It's very, very isolated. When we look individual names, again, somewhat of a mixed bag here, but you're going to see obviously the tech and the discretionary. These areas are where you'll see the spots of green. NVIDIA still finding itself having an up day, all that little batch there. Broadcom, one heck of a reversal from its high. Obviously only showing it was down 1%, but it was up, I think the high was 920 today. So certainly, and closing pretty much on the low. So that was not a good look. ETF wise, what we're going to see is what we've been seeing. XLK, right? The tech's going to be doing well. Semi is going to be doing well. As of right now, I got the Qs up here, of course. So anything kind of tech heavy, looking all right. The SMH up another 0.5%. Gold rebounded a little bit. I don't know how much faith we have in that rally yet. You're going to see over here bonds actually getting a little bit of a push up on Tuesday. So we're not gauging a lot from this. If this rally has more into it, a pullback would certainly be healthy. We looked at this in our last ETF spotlight, specifically with the XLC and XLK, that a nice healthy pullback to the breakout areas would be great entries. But when we look at where they are here today or even on Friday, just feels a little lofty, and I think we'll sit on our hands and wait for some pullback, even if it means we have to miss out on the last X% here. It's getting a little bit too much in the nosebleeds for us, right? So, as always, until next time, good luck in your trading.